Welcome to Daily Tax Minute. This is Tony Novak here to share a few points on how to stay out of tax trouble. All of this month of December, or at least until we get to the holidays, we're covering year-end tax strategies. And the reason I say until we get to the end of the month, it doesn't make sense probably to go right up until the last day of the month when we wouldn't have time to act on any of these strategies anyway. So what we're going to try to do instead is to wrap up this week, probably before Christmas, and then move on to something else for that very last week where we can actually learn something that we can actually have time to act on. And we'll be able to cover most of the common year-end tax strategies before them. So today's topic is, I wrote the boring issues. These are the issues that if you Google any author on year-end tax strategies, you'll come up with these. You'll notice so far in the month, I've tried to deliberately come up with some different creative, and particularly those in my niche, which is small business owners, tax professionals, real estate owners. And now we're getting into some of the mainstream ones that do pertain to a wider range of people, but I'm making a joke that they're on the boring side. So 23,000 and 7,000. What am I talking about? That is the maximum allowable deduction in a 401k and an IRA, respectively, for 2024. It's a little bit lower for 2023 for the 401k. It's 23,500, so it's bumped up $500. The point is that I'm bringing it up is, as I'm doing year-end reviews with clients, one of the things that we do is we get a hold of the pay stub. I would have liked to have gotten a hold of that pay stub mid-year, and I do send out an email and a text message reminder to send the pay stub and schedule a time to go over it. But frankly, most people ignore it. So here we are at year-end, and now I'm looking at pay stubs of high-income people that do have the ability to make some tax planning moves. And what I'm finding is that they've not updated their 401k since earlier years when the minimum was much lower. It's not that they could not have done so, but it is definitely that it was an easier decision and satisfied whatever nervous concern there was at that time to not make any change. In other words, they knew they could have put more in the 401k, but were nervous about the cash flow and this issue and that issue and remodeling the house and whatever else expenses, so they didn't do it. Had we had a financial coaching and tax planning session mid-year, I'm betting that we would have solved some of those issues and been in a more tax smart, more tax efficient position today. So that's my lesson. I'd love to hear your thoughts on the idea. I'm easy to reach, taxproblems.cpa website to schedule a call, or just simply respond on social media, and love to hear your feedback. I'll be back tomorrow